Welcome to the Case Study Learning Series in Marketing Management by Skilled MBA. In this session, we examine how Bajaj Auto, India's largest two-wheeler exporter, successfully expanded its operations across Africa's complex markets. Africa offers tremendous growth opportunities, but it also presents unique challenges: economic volatility, fragmented infrastructure, and regulatory hurdles. Through this case, we'll explore Bajaj's international strategy, focusing on how the company tailored its products, supply chains, and branding efforts to unlock value in diverse African nations. Before entering Africa, Bajaj conducted a detailed market analysis framework that focused on economic assessment, GDP growth rates, rising disposable incomes, and infrastructure development helped Bajaj identify countries with long-term potential. Competitive landscape. The team studied the market share of international and local competitors to position themselves appropriately. Regulatory environment. Import duties, transportation policies, and local assembly requirements informed strategic decisions. This structured approach allowed Bajaj to make informed choices, not only about where to expand, but also how. Understanding African consumers was critical. Price sensitivity. Customers prioritize affordability, not just purchase price, but also fuel and maintenance costs. Durability requirements. Roads are often unpaved. Vehicles must withstand rough terrain and irregular servicing. Fuel efficiency. With high fuel prices, efficiency became a key differentiator. Utilitarian use. Motorcycles and rickshaws aren't just transportation, they're income generators. This insight shaped Bajaj's product development, marketing, and pricing strategies. Bajaj introduced a product line tailored to African conditions: motorcycles, Boxer, Pulsar, and Discover, rugged, fuel-efficient bikes with reinforced frames for durability. Three-wheeler rickshaws. RE variants served as affordable taxi options in dense urban areas. Small commercial vehicles, Maxima cargo variants helped with last-mile delivery and micro-logistics. Each offering served a clear economic use case, aligning with the entrepreneurial spirit of African consumers. Bajaj's market entry was deliberate and strategic. Market assessment prioritized countries with favorable demographics, demand, and manageable regulation. Distributor selection partnered with local firms with strong networks and cultural knowledge. Local assembly set up assembly plants to avoid high tariffs and create local jobs. Market expansion began in urban centers, then expanded outward using localized marketing campaigns. This phased rollout reduced risk and built strong community roots. Egypt became a showcase market for Bajaj's adaptability. Product adaptation. Vehicles were modified for desert and pothole-ridden roads. Service network. Spare parts were made available across major cities, supported by trained local technicians. Competitive pricing. Positioned affordably relative to Japanese brands, but with higher perceived quality than Chinese alternatives. Targeted marketing. Focused on small business owners, highlighting income-generating potential. This created a strong value perception in a high-potential but challenging market. In Nigeria, Bajaj positioned itself on three key pillars: premium value, balanced cost with long-term savings, and reliability. Reliability promise. Showcased durability with real-life testimonials from users navigating harsh terrain. Local credibility. Years of consistent presence helped earn trust among dealers and riders alike. Bajaj wasn't just selling motorcycles, it was building a trusted, respected brand in a tough, competitive space. Kenya demonstrated Bajaj's social impact and service excellence. Economic impact. Each vehicle became a source of income, especially for ride-hailing and delivery services. Affordability. Financing options made vehicle ownership possible for low-income earners. Performance, fuel efficiency up to 50 km/h and sturdy performance on rural roads. Service support, nationwide service network, 48-hour parts availability, and hotline support in local languages. Bajaj's value proposition in Kenya blended economics, efficiency, and empowerment. Bajaj competes in a multi-tiered landscape. Brand market share notes: Bajaj 32% market leader across multiple regions, Hero 18% growing presence with Indian Synergy TVS, 15% regional strongholds, price-driven Honda, 12% premium segment Yamaha, 8% sports and youth-oriented Chinese, Deere's 10% ultra-low cost. Short lifespan Bajaj carved a niche between Japanese reliability and Chinese pricing, with localized execution as its edge. Despite success, Bajaj faced logistics headwinds. Port congestion, 3 to 4 week delays, increased cost and uncertainty. Inland transport, poor roads led to damaged goods and higher insurance. Inventory management, lack of large warehouses forced fragmented stocking. Last mile delivery. Remote dealerships required customized logistics solutions. These realities forced Bajaj to build resilient, flexible supply systems across the continent. Each African market brought unique obstacles: country currency volatility, import restrictions, local content mandate Nigeria high, severe 30% Kenya medium, moderate 20% Egypt, very high moderate 25% Tanzania medium, low 10% Ethiopia, high very high 35%. Bajaj had to customize compliance and production models to navigate this regulatory complexity. Key threats included sudden import tariff hikes. Unpredictable regulatory changes disrupted pricing in Nigeria and Ethiopia. Manufacturing pressure. Governments pushed for full local production, not just assembly. Environmental regulations. New emission standards required frequent technical upgrades. Fragmented standards. Each country had its own compliance rules, making uniform product development difficult. These challenges required an agile and politically aware strategic team. Africa's emerging middle class brought new expectations. Brand consciousness, preference for trusted global names. Technology features, interest in digital dashboards, connectivity, and safety. Environmental awareness, a budding interest in fuel efficiency and electric alternatives. Social media accelerated these changes by exposing consumers to international product trends. Bajaj had to evolve from a utilitarian provider to a tech-savvy, aspirational brand. Looking forward, Bajaj sees strong tailwinds. 42% projected growth in two-wheeler demand by 2025 across Africa. 15+ untapped markets with high potential remain underpenetrated. 30% EV adoption expected in urban centers by 2030. This highlights opportunities in both geographic expansion and electric innovation. Early EV development customized for Africa could secure first-mover advantage in a future-proof segment. To maintain leadership, Bajaj must invest in local manufacturing, build factories to meet regulatory demands and lower cost, lead electric transition, create low-cost, rugged electric vehicles for African roads, develop local skills, expand technician training and service knowledge, engage communities, build programs to support entrepreneurs who rely on Bajaj vehicles. Long-term success in Africa will require deep localization, strategic foresight, and social integration. Bajaj Auto's African strategy teaches us that international expansion is not just about scale, it's about intimate market understanding, product-market fit, and long-term commitment. Thank you for joining the Case Study Learning Series in Marketing Management by Skilled MBA.